Hey traders, welcome back to another edition of the market review. My name is Vasily, I'm a trading coach and professional forex trader. In this video we will discuss wedge pattern. In my view, wedge pattern is one of the most important price action patterns. I frequently apply wedge pattern in my trades, and in my view it is a phenomenally accurate pattern. You definitely must know that if you want to learn technical analysis, and in this video I will give you the real example how I apply wedge pattern in trading, and I will try to show you how I place my stop for trading wedges and how I select the target. Please enjoy this video, like this video and subscribe to my YouTube channel. Let's start. Alright traders, for better understanding of the wedge pattern, it is very important for you to realize that all the patterns, head and shoulders, double tops, triangles, wedges, they all are the price action patterns, and we call them the price action patterns because they based on the price action. For that reason, it is very important for you to learn to properly read the price action. More accurately, you identify the price action legs, more accurate are your trading predictions, and more accurately you trade the price action patterns. And you must remember that wedge pattern is the reversal pattern. For that reason, for the application of the wedge pattern, the market must be in a trend. Let's take the example of the classic bearish trend. In a classic bearish trend, we see the sequence of the lower lows, lower highs, and the market is just going like that. Yes, we have these steady swings to the downside, and after each and every correction cycle, the market tends to set new lows. Yes. What do we know about the wedge pattern? Wedge pattern also is based on the bearish or bullish price action. Yes, and if we discuss falling wedge pattern, in a falling wedge pattern we have the bearish trend within the wedge. Yes, but there is a very important thing to know about the price action within the falling wedge. The price action within the falling wedge contracts. What do we mean by the contraction? Here we are talking about the lengths of the impulses. If we talk about a bearish trend, here we talk about the bearish impulses, yes? And we simply take these impulses, yes, here was our first impulse, then here was our second impulse, here was our third impulse. You can see that the impulses become weaker and weaker, and with each and every consequent leg the market becomes weaker. Based on these legs, based on the highs and lows of the market, then we can draw the trend lines. Yes, we can draw the trend lines, and you can see that we have kind of the contracting channel. Yes, the price here is trading within kind of the contracting channel. Though we had kind of the false breakouts of that, still you can see that the price action contracts. We see the clear contraction, and at some moment bears become so weak that the resistance of the wedge doesn't hold anymore. We see the breakout. Yes, buyers violate the trend line, and it usually triggers a strong buying reaction. Many sellers stop selling, some sellers have stopped out, yes, and many people who were waiting for some trigger, they start buying, yes, and it most of the time leads to the trend violation and initiation of a new trend. Yes, and if we talk about the falling wedge pattern, the market initiates a new bullish trend. For that reason, it is very important for you to correctly follow the legs within the wedge. Yes, you must feel this price action, you must feel the strength of the legs within the wedge, so that you could feel how the market acts, yes, what the market is doing. Now let's discuss the example of the falling wedge pattern. Hey guys, and if you want to learn price action patterns, if you want to learn how to apply them in trading, I want to invite you in my premium educational group. There you will see how I trade live. There you will see my entire thinking process, from analysis to trade execution and management. It is very practical. You will see all the steps that I go through to find the trading opportunity and to execute it. Please check it on my website, vasilytrader.com/private group, and check the links in the description below. Let's continue. And very important thing before we discuss the example is that does the breakout initiates from a random price level, or we can look for some additional clues that can help us to predict the consequent breakout? Yes, we always should look for the key level. Most of the time when we trade the rising wedge pattern, there is some key level on the left, there is some historical level on the left, and once the market is approaching that, chances are very high that from that a strong bearish wave will initiate and the market will break the support of the wedge. Moreover, there is the additional clue. Most of the time, once the market is approaching a key level, we see the formation of the equal high or a lower high in a rising wedge pattern. Yes, if previously the market here sets the higher highs, each and every consequent high is the new higher high. Once it is preparing for a breakout, once the market becomes too weak, we see the equal high or lower high. And same thing with the falling wedge. Yes, look for the key level, look for a key structure support, because from there most likely, the breakout will most likely follow. And moreover, look for the equal low or higher low. Yes, because most of the time after that we see the initiation of a breakout and a strong bullish wave. Alright, to discuss the wedge pattern, we will analyze together Euro-New Zealand pair. Why? Because over here we have a perfect example of the very strong bearish trend, and here we will discuss the contracting market and the weakness just following the price action. So you can see that the market here is very bearish. Since 2020 you can see how sharply Euro New Zealand is falling, yes, and we keep setting the new lower lows and lower highs right here. And if we pay attention to the recent price action and just follow the legs of a move, look what's happening right here. Here we have a massive bearish leg, yes, then we have a retracement, and here the price sets the lower high. Then the price drops, yes, the price drops to that point, and from that we see the lower high again. Then we drop, yes, drop, and again new lower high, and then bearish impulse, and now the current price levels. So what can we derive just based on that price action? First of all, pay attention to the lengths of the bearish legs. Yes, for us it is very important to follow the bearish legs because the market here is in a bearish trend. So the initial bearish impulse here is very strong. You can see how sharp bearish movement we saw within this impulse. Then the next impulse is definitely weaker. And moreover, after that, you see we had some weird consolidation, and it is just even hard to see what was happening right here. Then we had one more wave, and again it is shorter than the previous one. The only exception is the last leg, but you got the point. Yes, you got the point that the market here is definitely weakening. In comparison to the initial impulse, now the market definitely is slowing down. Now, based on the highs and the lows of the market, let's try to draw the trend lines. You can see that over here we can draw this very nice falling trend line. Our task is to let it match the recent lower highs, yes, so that we have at least 3 touches, yes, and here we have 3 touches perfectly. And now let's find the trend line that serves as the support. From that point right here, you can see we can identify another trend line. Yes, so you can see that the price action within this wedge pattern definitely contracting. It signifies the weakness of the market. It signifies that, bears are not that strong as they previously was, and the market is preparing for the correction cycle. Yes, for the correction cycle and initiation of a local bullish trend. Now let's check from which point this breakout, the breakout of the wedge may start. Yes, let's analyze the structure and let's try to get from where to expect a breakout. To do that, I simply open weekly time frame, and on a weekly time frame we just can see the historical price action. And if we draw the horizontal line based on that peculiar structure level, you can see how nicely that level was respected in the past. Yes, and draw the box like that. What can we see? You can see that recently the market reached that structure. Yes, we see a very nice test of that structure. And moreover, over here we had a massive rejection. Yes, you can see this long wick, this very small body of the candle, yes, and moreover, though here we had a very strong movement to the downside, you can see that finally it was bullish candle, yes, so it tells us the strength of the buying volumes from that structure. So you can see we identified the wedge pattern, we see the contraction of the price action, we see the weakness of the price action, and moreover, right now over here we see a strong key level, yes, we see a strong major structure, and we can derive that from that structure the breakout may follow, yes. And now just let's discuss how to correctly identify this breakout. Back to the daily chart. On the daily chart, I removed our price action legs, and for now we have here our major weekly structure, yes, and here we have our trend lines, yes, the resistance of the wedge and support of the wedge. And it is very funny how it is easy, how it is simple to be caught by a false breakout. Yes, false breakouts are very, it is the reason why the majority of the breakout traders fail. It is very important to have some breakout, the false breakout avoidance techniques. And right here, yes, pay attention to this recent price action. You can see that right here, the market is trading in the local horizontal trading range. And what this horizontal trading range tells you about this current price action, it tells us the market right now is in kind of indecision mode, yes, and it is a very important sign of weakness. And most of the time, in case if we violate the resistance of the wedge in such kind of consolidation range, most of the time it will turn to a false breakout and the market will return back within the boundaries of the wedge, yes. So for the additional confirmation, yes, to make this breakout confirmed, what do we need? We need a daily violation of the resistance of this range, yes. Once the price breaks the resistance of this range, only then we consider the breakout to be valid, yes, and only then we know that it is not false. You can see how patient we should be, yes, to catch this. You can see that it is not that simple to wait here for the candle close above. Not that simple, bro. Yes, learn to wait here. Yes, it is very important. You can wait for the wicks, until the market closes above the resistance of this range, and only then, only once it breaks to the upside, then we can look for trading opportunities, yes, and we will look for the trading opportunities based on the retest, yes, based on the retest of a broken wedge. And you can say, but if it doesn't retest, then we don't trade. Yes, this is how it works. If it doesn't retest, then we don't trade. It is unfortunately part of the game, and sometimes because of the absence of the retest, we just miss the opportunities. But if it retests, it can give us a very safe point from where we can look for a swing opportunity, yes, to catch a major swing move. And when we trade the wedges, the safest point for us to place our stop is below the low of the wedge. Yes, it is a very safe point, and if you accurately identify the wedge, if you accurately spotted the breakout, with such a stop placement, it is very hard to stop you out. Yes, so remember about the safety. I always prefer safe stops. Yes, safe stops are very important for your confidence. For that reason, I'm trying to base my stops on the lows if I buy or on the highs if I sell. And of course, because here this breakout of the wedge may initiate a strong market movement, you can see that on the left right here we have a very strong structural resistance right here. Yes, you can see how far it is from the current prices. Yes, the structural resistance right here a bit higher. So this can be our goal for long trade. Yes. So this is your plan. You're on New Zealand. You're waiting for the breakout. Yes, you let the market break the horizontal range as well. You let the market close above that on the daily. Then you wait for the retest of the broken resistance of the wedge. And here you buy. Here is your stop. Here's your target. Yes, this opportunity will be, it won't be fast. Yes, daily time frame trades, they are not fast. Daily chart is quite slow. It's kind of slow. You can see how many days we are trading in this narrow range. So be prepared to wait. But if you wait, if you're patient enough, profit can be very nice right here. Alright traders, that's it. I guess we had a very nice discussion about the wedge pattern, and now just learn to recognize them. Open random chart and look for the wedges. Look how the market breaks them, what happens before it breaks the wedge, what happens after. Learn to avoid these false breakouts, learn to trade it. It is very important. Once you grasp how to correctly trade the wedge, you will see the dramatic increase in your trading performance. Please don't forget to check, by the way, my premium educational group. Don't forget to subscribe to my YouTube channel, and don't forget to leave a lovely comment because it motivates to record more videos for you. I will see you next week. Have a great weekend, traders.